Hey guys, Stock Saturday, and I've had a underperforming week. Not great, largely down to crypto, which I can get to a little bit later. But yes, down about 1.5%, and the markets are up. Looking at from Friday's close to Friday just gone, 1.79% on the S&P, and Nasdaq has fared slightly better, 1.94%. So yeah, tech stocks sort of doing reasonably well. Got the Europe pause on the tariffs, and then a local court in the US say that all the tariffs are illegal, essentially, or not something that the president can just enact. They've then appealed it, and it looks like it's got a temporary appeal, but yeah, there's potentially sort of all of the tariffs being completely walked back, and anybody who paid them refunded with interest, and yeah, that would be a massive blow, I guess, for the government and Trump. So we'll have to see. Still not making any trades or anything in, certainly on the Trading212 side, because this is all going sort of most likely towards the mortgage, and yeah, not a huge amount happening in here really. Yeah, most of these were sort of largely flat, 1 or 2% up or down, except Broadcom, which was up 5%. So it's quite good. Obviously, largest holding in it does help when you have a big gain on that. So this account is sort of pretty much the only account that is up. So yeah, interesting. So let's have a look at some earnings. So looking at Applied Materials, second quarter results. This is obviously Q1 calendar year, but second quarter results for the financial year. Broadly, looks very nice. Revenue up 7% year on year. Gross margin slightly better. Operating margin slightly better. I tend to focus on net income as long as there's sort of no anomalies, and just see sort of what percentage we're looking at. Sort of the reason I got into a lot of the businesses that I've bought recently, sort of BlackRock and Euronext, Applied Materials, people like that. So what do we have? This quarter last year, about 25.9% net profit, which is very good. A lot of companies sort of people are focusing on, looking at adjusted EBITDA, and well, certainly some of my companies, it's sort of, what can we remove to make the figures look a little bit better? Where, somebody like Applied Materials, it's just proper, no bullshit net income. So this quarter, that has improved, and yeah, they broke 30% again. So I don't think they've done that in many quarters recently, for sure. So I was very happy with that. Non-GAAP net income is slightly lower, so there are a couple of adjustments which take a look at. But yeah, very strong. Free cash flow is obviously a bit lower. They tend to reinvest quite a lot, which I would rather. Don't want them sort of making a fortune, and if you're going to make sort of 25 to 30% net profit quite regularly, then don't want that all to just be dividends and buybacks and things. You want them to maintain their strong competitive advantage, as they say. They are giving guidance for Q2. They call it Q3, but April to June. Revenue up $100, $100 million since Q1, and EPS is down quite a bit, so net profit will be quite a bit lower, but still fairly solid. They tend to look at non-GAAP gross margin, 48%, where that was 49.2%. So yeah, there's some other bits that are affecting net profit there. Looking at the segment reportable, Foundry is sort of 65% fairly constant. DRAM and flash memory sort of move about a bit, but foundry logic is sort of the big, the big dominant segment there. So that's good. And the semiconductor side obviously is the bulk of revenue, which is pretty good. Applied global services and displays and that sort of thing, smaller segments, but doing pretty well. Display especially has grown sort of quite a bit from this quarter last year, so that's good, but it's very, very small segment. And then that breakdown of profit does look quite good actually. It's revenue increasing quite a bit, and basically R&D not increasing a huge amount, marketing and selling not, and general and administrative costs coming down on increased revenue. So yeah, that could be just a one-off. You have sort of pension contributions and stock-based compensation and all sorts of stuff. At different points in the year, it might have just been a low quarter, but that's pretty solid. Interest income increasing as well to 221 million. So that's it's always nice to see, like operating income lower than profit before tax. Good to see a strong balance sheet basically. So speaking of which, they've given it for some reason compared to 2 quarters ago, rather than sort of this quarter last year or last quarter. But cash down to 6.17 billion. So yeah, a little bit down, but nothing too much. Other current assets, or total current assets, down about 1.5 billion. So basically just on that cash for the most part. Short-term debt is quite small and hasn't really moved at all. Neither has long-term debt. So cash pretty much the same as total debt, which fairly happy with. It was nice when it was $1.5 billion over. I like it to be sort of as much as long-term debt or more. As much as total debt or more rather. They noted a few bits in their presentation as well, that they are sort of looking at the future. They're sort of well positioned for gate all around and backside power delivery. That's sort of the next the next couple of nodes at least worth of semiconductor developments from the looks of it. Sort of going down to 2 nanometer and beyond on the CPUs. TSMC reducing node sizes, and to keep doing that, they need these new technologies. So Applied Materials sort of well positioned to be manufacturing bits and pieces for that, and some rather large machines. Sort of think of Applied Materials as a bit of a nuts and bolts, play on the semiconductor industry, but they do make some pretty big stuff. Not quite as big and expensive as ASML, of course, but yeah, fairly big. Obviously, I'm not going to try and pretend to know everything about these, various portions of the industry. It is more of a sort of, picks and shovels type bet for me. But it's good to know that they do sort of keep on in the future, and they do sort of note that they're basically everywhere in the industry between them. Solely and sort of joint ventures with partners, so that's good. And did note when I say sort of I'm not keen on them to be hammering the dividends and buybacks. They sort of note that they are doing a reasonable amount. Obviously, the last sort of few years buybacks have trailed off a little, and they've sort of been doing reasonably sized dividend increases, 23, 25 and 15% the last 3 years. So yeah, that's fairly chunky. So moving on to Himax, it's sort of not been a great quarter. Again, they'd sort of been reporting that this wouldn't be ideal, and it would be sort of way down on previous peaks of profit. But the big sort of buzz about Himax obviously is the link to TSMC's silicon, optical silicon new CPU sort of manufacturing. So yeah, that's what everyone's looking forward to, and they're saying that that's going to be ready, start sort of first deliveries end of next year, sort of second half of next year, and mainly into 2027. And that could sort of analysts are still saying that could double, potentially triple profit. So you sort of have a few maybe rough looking quarters, and then you know, second half of next year things start to sort of really pick up. And if profit's going to triple in 2 or 3 years, then investors generally won't wait until that happens and then the stock price goes up 3x or more. You would sort of start to price that in advance. So the hope is that we get some solid developments on that, and people start sort of pricing that into the stock. And obviously you've got their current business, sort of displays in cars, automotive side. They've sort of said is that one of their main drivers. So you've had car industry in a little bit of a slump, and sort of display in general been in a little bit of a slump. Noted applied materials and sort of various other broad semiconductor stocks have noted that AI is in a boom, but everything else largely isn't in a boom. So yeah, Himax is sort of struggling a little bit while that's still going on. Interesting to note as well that obviously I have the stock held in the invest account, and then I have the options. So the stock I can hold for 2 or 3 years and wait for this silicon photonics to come to light, whereas the options do end in January. So I'm kind of hoping for some developments at least sort of towards the future to happen before January to sort of push those options a little bit. But yeah, the stock itself I can sort of hold until this all comes to light. So yeah, revenue sort of barely up. It's down on last quarter, up slightly from this quarter last year. They sort of note obviously that Q1 is generally a weak-ish quarter. Expenses down ever so slightly, so that's quite good. Operating income up to 20 million. Not exactly a huge amount, but there you go. Profit before tax due to sort of some other gains and interest income is 24 million. Net profit after tax, back to 20 million. So not the worst. They don't do buybacks or anything like that. They do a dividend, but they don't really focus on buybacks. So yeah, cash is up to 275 million. Inventories coming down. That's what they like. And debt, long-term debt is 27 million. So that's pretty solid. And short-term debt basically the same. They've got a very small amount of new unsecured borrowings, and then their secured borrowings, which is sort of netted off with their restricted deposit. So that stays the same. And just looking at their presentation, so as I say, EPS beats by a very small amount. They were guiding 9 to 11 cents, and they got 11.4 cents. But sort of various analysts are guiding towards sort of once the silicon photonics gets underway, potentially sort of 40 to 50 cents a quarter. So as I say, if that does come to light and it's going to be 40 or 50 cents a quarter in a couple of years, you don't necessarily sort of wait 2 years with the stock flat and then, we start earning that and the stock goes up 2x in a very, very short space of time. The market is sort of generally forward looking, maybe not with sort of smaller companies like this with very few analysts, but we'll have to see how things progress. yeah, this inventory level is something that they've been sort of making people aware of every quarter. It was a problem, sort of the industry sort of pulling back and only wanting just-in-time delivery, basically. So they were sort of working through this inventory rather than selling, selling new products. And this has come right the way down now to 130 million. So down almost 30 million in the last quarter, and sort of 34 million previous quarter, and is, you would think, down to very, very normal levels now. So hopefully the legacy business, I suppose you call it legacy business, should start to pick up. And they're sort of noting the cash dividend. It's quite a large cash dividend, to be fair, payable on July the 11th, and that's 81% of last year's profit. So you can see what they do tend to do with the profit. But the stock is, as I say, all about largely all about the new TSMC development now. Guidance, yeah, decrease of, well, between 5% down and 3% up they're expecting for Q2 compared to this quarter. About 31% margin and between 8.5 and 11.5 cents net profit. So yeah, very very little change on that, where they have sort of been saying next quarter things will be improving. They're now not even really saying next quarter will be improving, but it's a sort of next year or 2027 stock now. They've noted a few sort of headwinds, maybe the new Taiwan dollar appreciation against the US dollar. That's certainly happened in Q2. Dollar's been sort of falling against pretty much everything, but the Taiwan dollar had a particularly strong sort of, whether it was maybe not manipulation, just something that government have actively decided, basically, sort of, I guess, open and public manipulation. And they've noted that tariffs had not had a significant direct impact on their business. 2%, around 2% of their products are shipped directly to the US. So it's that word directly, I suppose. They're shipped to other places and then shipped to the US, and that means there's no significant tariffs, or maybe greatly reduced tariffs. Some customers requested early shipments to avoid the tariffs. Others sort of deferred orders. So there's still a little bit of uncertainty, and they give some sort of guidance around various sectors. Things sort of looking okay. Automotive sort of potentially picking up, but would have been nice to see some silicon photonics news. Didn't really get any in here, so that was a bit of a shame. So looking at some economic news, we didn't really get anything. Well, Monday was bank holiday. Tuesday and Wednesday were quite quiet. Thursday, the jobless claims in the US starting to pick up again. Initial claims up, and continuing claims above 1.9 million again. So that's not ideal. And the core PCE number, as Jerome Powell always says, is his sort of preferred inflation metric, came in at 0.1% for the month. So that is rather low. And last month's was revised up from 0% to 0.1%. But if you start getting repeated 0.1%, obviously that's sort of over 1.2% on a annualized basis. So yeah, that's well below their target. On the yearly, 2.5%. Last month's again slightly revised up, but 2.5% with jobless claims quite elevated at the moment. There's potentially, I guess, June rate cut maybe back on the table. Can't remember when that is, the FOMC meeting, but they maybe get some more data before then, and yeah, they might decide to cut. The headline PCE. I don't think they focus on this quite so much. It's a bit like headline CPI, but that is at 2.1%. I guess, and this is sort of partly due to oil coming down. So it was expected to come down to 2.2, it was 2.1. So again, people will be saying, you do look at core, but headline is basically at your 2% target, and they're still almost double that on Fed funds rate. So they're not cutting. GDP now, this is obviously ping-ponging around all the time. I think beginning of the week, their forecast for Q2 was 2.2%. And then Friday suddenly jumps up to 3.8%. That'll probably be back down again next week. But yeah, potentially people start looking at a rate cut. That would be interesting because it's not, as far as I've seen, not priced in at the moment. And looking at the portfolio, I guess one to highlight that I don't sort of give a huge amount of coverage is Fresnillo, sort of quietly making its way up the leaderboard, if you like, in my portfolio. It's overtaken Equinox Gold and Riot Platforms. No buys and sells with any of these. This is just market performance. And it should be noted as well, I forgot that it even went ex-dividend. I think that was sort of a month ago. And yeah, yesterday got a £730 dividend from Fresnillo. So stock price is outperforming quite a bit. This was 50% gain sort of just a couple of weeks ago, I think. Now 60.1%. And then a £700 dividend on top of that has pushed cash up to 11,680. Again, I'll probably use this for the mortgage. I won't withdraw it from the ISA because I'd just rather not be sort of withdrawing cash and then redeploying it later on. Probably just sell something within the invest account, and withdraw the cash from the invest account, and then use this cash to buy back whatever I sell, basically. So I sort of not really a bed and ISA, because I'm not actually making a deposit to the ISA, but it's just a way of sort of selling and rebuying, and so I get to basically use this cash without withdrawing it. So it does give me sort of about 44,000 between sort of all of the accounts, and then I've got between that and premium bonds and everything, I think I've got about 50. So that is quite good. Probably still will have to sell something else in here as well, possibly Vanguard emerging markets, depending on how things do, but I think that's August, September time, so we'll see. Obviously the crypto side and Kerr mining sort of come down slightly, but is still looking fairly strong. CleanSpark and Riot Platforms sort of took a reasonable hit. Herein especially, that has certainly taken a hit. Pan American sort of and KGHM again barely moved. I feel like I'm sort of saying that every week. And on the option side, so we've got Equinox sort of not really moved a huge amount. Kerr mining come down to this was sort of very, very high, is up from last week, but was slightly higher than here, 625% in the green. So very, very nice. Quite tempting to take a little bit of profit. That could, depending on price action, that could be something that I sell and use to pay off the mortgage. But we'll see. Hive, I have sort of bought a reasonable amount more, sort of buying $5 strike options. So with them at $1.80, obviously that's hoping for quite a large gain, but I was originally buying and still hold quite a bit of $10 strikes. So $1.80 to $10 is quite a move by January. But if we get a decent crypto bull market, I certainly think it could get there. But yeah, $10, and obviously I would want quite a bit more than $10 to really make any money out of it, and that's why the market isn't liking it. So yeah, that's a significant amount of red. Herein similarly hasn't liked this week's Bitcoin price at all, so that's way down. This was about 16,000 last week. Hymax barely moved. Riot just hates life. And I did take a little bit of a punt on another miner, Cypher Digital. That's obviously, not timed particularly well, as only a, very small position. Sort of 30% loss is, 200 quid, whereas sort of 11% gain on something like Equinox is over 2 grand. So these small punts, won't sort of be life or death. But the reason sort of for going for Cypher is from, various reports basically hinting that they're very, very, maybe the closest to an AI deal. They're sort of similar to Herein. They have quite a bit of exahash, but they have what sounds like completely finished data center ready for AI. And again, various people have been saying that they haven't been deploying any Bitcoin ASICs in. So that would sort of hint at, the idea that they have maybe a deal in the works, not quite signed yet. But the only reason you think you would not put any rigs in, even temporarily, is that, it's meant for HPC. So who knows? But that was sort of maybe a short-term punt that, they get a deal done, the price sort of doubles, and I would probably sort of get out of those options, maybe back into one of the others, or just take that as a short-term little gain. CleanSpark as well, come right the way down on this Bitcoin drop as well. So still 6,360 in cash. I was kind of wanting to keep this above 6,000, so we'll see where price action goes in the next week or two. Leave your thoughts in the comments then, how you guys are doing, and like and subscribe. See you soon.